Good Tuesday morning, Market Chameleon community, and everyone join us for this first time. Welcome to the Chameleon community and our live YouTube show with the main man. There he is, the king, Dimitri Pargamonic. How you doing, D?
Good morning, Will. Good morning, everyone. How are you?
Excellent. So the disclaimer's up. Do you want to start with the disclaimer?
Yep. Hi, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's the disclaimer.
Excellent. So what's on tap for this morning, my friend?
So I think I'll cover a couple things about open interest, just based on some of the questions I've seen coming through on the emails. We've covered it in the past, but I think, as we go along, new people come in, some similar questions pop up. So I'm going to cover open interest, volume, things that I think maybe people don't quite understand how things work or misinterpret what they're seeing. At the same time, if anybody has a question out there, you put it out on a chat, on a live chat. Will is monitoring them, or Will's also putting in a link to Zoom. You click on that link, you come over to Zoom, raise your hand. You could ask your question live. You don't need to turn on your video camera. So with that, I think we'll get started. Let me just share my screen. And before I go to open interest, let's quickly take a look at what's going on in the pre-market hours, and then we'll move on to option open interest. So this is the pre-market report, stocks that are trading in the pre-market hours. We have the most active list of the biggest percentage gainers, list of the biggest percentage decliners. I'm going to come down here real quick. I see 225 stocks made our percentage gainers list, 33 on the percentage decliners list. So right now we're looking at a more bullish bias at the open, kind of reverse of what we've seen yesterday. Let's take a look at the S&P 500 stocks to see if there's a similar situation there. I'm going to come up here. These are the filters. These filters control the data in this report. I'm going to drop this down in ETF. I'm going to pick SPY. By doing that, it will filter the list by the S&P 500 components. So let's try that. So here we see 39 stocks in the S&P 500 are on our percentage gainers list, only one on the percentage decliners list. So right now, we're looking at a more bullish bias at the open. All right. If there are no questions, then I'm going to move on to open interest.
All right, move on.
Okay. So I just put it SPY. We'll use that as an example here. And let me come to options, open interest. And this will be on open interest changes. The reason I bring it up is, I do get it. Most of the emails, by the way, we get are overwhelmingly really nice. I get really a lot of nice emails from you guys. So thank you, ever appreciative. But once in a while, I get this email where somebody's angry because they think that, well, I'm seeing something that's not supposed to be that way. Why is it? Is it the data? Is it this? And a lot of times this is how things work. You just have to understand why it's happening, right? So there's a reason behind what you're seeing, and you just have to understand how things work and why it's like that. And so this one was an open interest, and sometimes what people will do is they're going to compare volume, options volume versus open interest. And I'll give you an example over here. Like here's yesterday, the 450 call strike. So I'm on the 450 strike, SPY, right? I'm going to come over here, and yesterday there's 13,150 contracts that traded on this call. The open interest, though, is only 1,300, increased by 1,258. Same thing for 48 call. You could see a lot of volume, 4,567. Open interest increased only by 691 to 712. And when people see that, if they don't understand it, they think, well, what's going on? Because if there's 4,500 contracts that traded, I'm going to open this up. Here's the ticket yesterday. And here are all the trades on this 448 strike. So we're looking at the December 448 call. And here are the trades, and you could see there are a lot of trades going on here. And if I scroll down, all day we see trades, different size trades. And we could see a total of 432 different trades for a total volume of 4,592, right? So each trade could have a different volume. Sometimes you have one trade that's only one contract. Sometimes you have one trade that's 23 contracts, like here, or one trade could be 100 contracts. So we have a number of trades and we have the total volume of those trades. And the open interest coming in that day was only 21 contracts. Okay. So why is there so much volume in something, but the open interest, changed by very little relative to the volume? Maybe open interest, doesn't even change. Sometimes it could go down. And I think that maybe some people just don't quite understand the difference between the volume and the open interest and how the two relate to each other. And that's where it causes frustration. All right. So that's kind of what I'm trying to address today. Now, when we look at what's the difference between volume and open interest is also important, and when they get calculated. So another thing is when people look at open interest, they're expecting it to move throughout the day. With the volume, that doesn't happen. Open interest gets calculated by the Options Clearing Corporation, and it's based on settled trades, end of day settled trades. They take into consideration any exercises, assignments, splits, and so forth. So they wait till the end of the day to see which trade settled, who exercised their options, are there any kind of corporate actions? Then they reconcile it and make it available the next day, overnight. So you're not going to see open interest changing through intraday. There's no official calculation like that intraday. But the volume does change intraday. You'll see it growing because volume is something trades. There's a volume, and this will change, throughout the day. So you're going to see one moving throughout the day, one not moving. The open interest the new open interest will be displayed after it's reconciled overnight by the OCC. And so why does this happen? Let's just take a look at this situation. Why? And there are a lot of different scenarios that play out between volume and open interest that to a person just looking at it from the start will not make sense. So let's play out a couple of the scenarios. And if you guys have an example you want me to take a look at, I will take a look at that, or have a specific question, I will. But why does this happen? Why was there 4,567 contracts, but the open interest only increased by 691? All right. And I'm going to bring up my notepad. And first, just to explain how open interest works, is that an option, when it's first listed, has no open interest. Okay, until there's a trade, there is no open interest. It's not the same thing like a stock where it has outstanding shares. That doesn't happen with options. And options is just a contract between two people. So let's say Will and I, we have I think the stock is going to go up by a certain amount, by a certain date. Will believes no way, that's not going to happen. And I'm willing to say, well, let's make a bet. I'll pay you this much. You'll say, okay, I'll take it. And then we create a contract. So that's once we create that contract until it expires or we close out of it or trade out of it. If that's all that happens, we created an open interest because that contract now, I have an one of us has an obligation, one of us has a right, but that's going to be legally binding contract. right? And that created the open interest because we initiated that trade. So that's how. So remember, open interest, it starts at zero, right? There is no outstanding share. Starts at zero. So let's say that Will and I, we create a contract, and I'll call, person A, buys from person B. Now notice that to sell a contract, you don't need to own it, right? You just create it. You just have an obligation to say, okay, I'll make that bet. So no contracts existed, but I decided, okay, somebody wants to buy it, somebody agrees to sell it at a price, and we come to terms and we created a contract. So you don't need to own it. You just create it by saying, I have an obligation to you, and you pay me for that. So person A buys from person B, and let's just say it's 100 contracts, right? So person A now owns 100 contracts. Person B has an obligation for 100 contracts. If nothing happens, what's the open interest? Open interest is 100. Okay, so that's nothing happens. But let's just say the same day, and what is volume? Open interest and volume is 100, right? So there's 100 trades that day, a volume of 100, sorry, and the open interest will be 100 the next day. And that's very simple to follow. It would make sense. But let's say in the same day, person A, right, sells to person C 100 contracts. Now he could do 50, he could do he could do any, but let's just keep it at 100. Well, the volume now increased to 200 contracts that day, right? That's the new volume, 200 contracts. But what is the new open interest? Can anybody tell? I'm just curious to see what people think the new open interest will be if that's the only thing that happened that day. So volume now is 200. Will, you're on mute.
Sorry, D, I did that so we didn't get any reverb. If you know the answer, anyone, let us know. But there is could be up to a couple minute delay, D.
All right. I mean, I guess then I'll just move.
Alex says 0.
So let's see. So right now 0.
No, it's 100. He says
100.
Yeah, I mean, he's obviously doing the math in his head.
Okay, great. So because I'm showing you person to person, right? Then it's a little bit easier to understand what the new open interest is, because actually, right, what happened was person B is still short, right? The 100 contracts. Person A no longer has it, but person C is long. So the contract is between C and B, right? So the open interest is 100, right? So now you could see that I have a volume of 200 on the day, but the open interest is just 100 in this scenario. But because the exchanges don't show you this, person A to person B, person A sells to person C, we don't know the people and what their positions are, right? So we can't always just guess from the volume alone. Sometimes depending on the trades, you can kind of guess if it's just like one trade, zero open interest. But a lot of times we don't see the people in their positions. So trying to even predict an open interest might be even futile because we don't know everybody and their positions, what they're trading. So in this scenario, the open interest ended up being 100. But it could have also, if we didn't know this, right, it could have been 200. It's very possible, or it could have been 0. Somebody closed out. So it's not predictable what the open interest will be every time. You have to wait to the next day to see it. All right. You might take a guess because in this same scenario, all right, in this same scenario, what if what if person A, sells to person B, oops, sorry, typing fast. B, in that case, right, the volume would have been 200, but open interest would have been 0, right? So now we still have volume 200, but the open interest is 0 instead of 100. Or, we could have had person A buys from person B, that's 100. And let's just say then, person C buys from person D 100. So then the volume, right, is 200, and then open interest is 200. So you could see from the volume alone during the day, it's not very predictable what the open interest will be because we don't see this part. We don't see the players and their positions that, nobody, that's anonymous. So because we don't see that, we cannot even predict with accuracy what the open interest will be. Now, sometimes you could have it with a bigger accuracy because if this is the only trade, if open interest started at 0 and this was the only volume, then we could kind of say, we think most likely the open interest will go up by 100 because there's only one trade. There's no other open interest for people to close out. So sometimes you can predict with a higher degree of accuracy, but sometimes we can't because as we see here, open interest was changed by very little relative to the overall volume on the day in SPY. All right, so hopefully people start, if there are questions, let me know, Will, but I played a couple different scenarios out. So why is the open interest, why is that even important to us is the following, that the volume here is telling me that there was a day trading going on. People who were establishing positions were either not committed or it was rotating. So the people with open positions were also closing the same day. And as we look through it, a lot of trades, but were those trades, people just kind of rotating in and out of positions intraday, day trading it or so forth. So the committed trades, you would start seeing open interest to climb, meaning people are starting to accumulate a position, right? People are starting to build a position. And that's when you start seeing open interest that the people who are buying or selling are interested, that they think that it has further to go and they're pouring more money into that trade. So that's what the difference between open interest and volume is. The volume is just telling us how much interest there is to trade that option. The open interest is really telling us how much are they actually accumulating that risk and holding on to it in anticipation of further gains, right? Or it could be a hedge, but they're interested in that particular trade. And that's what the difference between the volume and the open interest. And it's important to understand it because, I do see frustrations going on here and there in these examples. Another example would be like somebody sees one trade, and I see this, a deep in the money call. Let's say they're gonna come in here and say person A buys from person B 100 contracts. So they'll see, and let's say the starting point is 0 open interest. So what they'll see is a volume of 100. The next day, open interest is 0. So why is that happen, right? Like there's only one contract, one trade, So with zero open interest, so how can that happen where, the person obviously didn't just trade back out of it, because we'd see another trade. You need at least one more trade to see somebody trade back out of their initial contracts. So why is there a volume of 100 but open interest is 0? Well, that could be, and there's sometimes it happens in deep in the money call for dividend, deep in the money put, that the person buying that option exercises that option the same day, and that takes the open interest back to 0. So by exercising that option, you convert it to stock, you convert it to the underlying, and the contract goes away. So this is also very possible, depending on the circumstances, where you will see maybe even one big trade, very big volume, but the open interest the next day looks like nothing happened. And there are certain instances where people need to do that based on position. It's more complicated. I'm not going to get into it right now, but there are certain times where people want to do that, maybe need to do that. And when that happens, you'll see big volume, maybe one big trade, could be several, and then but the open interest is it's like 0 the next day. Right? Starts at 0, ends up at 0. So we showed why the volume could be much larger than the open interest change, or why even there could be volume and 0 open interest the next day. And these are questions, sometimes I get, because if you're not used to it and you see it and you don't play out these scenarios, it looks odd, it looks strange, it looks like it's not right, but it is right. You just need to know what's probably happening, and how it could have gotten led to that scenario. So if there are hopefully that's that
was really helpful, D. We did have a question from Alex. He was asking, how is open interest affected when the order is sell to open?
Well, so again, I don't know if the sell to open itself will affect the open interest. It's the outstanding contracts and who's trading with who, right? So even if you're selling to open, right? Let's say you're selling to open,
someone else may be buying to close.
Yeah, buying to close, and then it just kind of upsets. So the scenario, the first scenario I played out, it could have been, selling, you're selling to open, somebody's buying to close, so it wouldn't matter. It just depends on, what, both sides, there are two people on that transaction. What exactly are their positions? Because you don't know both their positions, and what are they intending to do the rest of the day with those positions? Are they exercising, trading out of it? So it's very hard to say. You can't do it just with that. You would really need to know all the circumstances around it, right? You need more information than just that.
Perfect.
Yep. So I think if people are okay with it, we only have a couple minutes. I left it to, open for questions. No questions.
All right, we'll give it a couple seconds. Anyone have a last second question for Dima? We have about 6 minutes left, maybe 5. We are having a webinar with Raj tonight at 6. Raj is coming on and talking about option Greeks. If you want to join us, make sure you register. I'll put a registration link in the chat. Other than that, D, great job today, buddy.
All right. Well, thanks everyone for joining. Stay safe out there. Have a good trading day, and hope to see you guys tomorrow.
All right. Trade in peace, chameleons. Enjoy your Tuesday. Bye.
Bye, everyone.